Today I am going over supply and demand. I'm doing it in EG or EUGBP. You know what I'm saying? Euro GBP. Excuse me, I don't know why I'm getting tongue twisted. But I don't trade this pair for real, but I have all my other pairs set up for the week. So I wanted to come here to kind of show examples, and then I'll go to my pairs for the week to show live examples in pairs that I actually trade. So today is actually Sunday, or it's Monday morning, but technically it's Sunday for me. It's just after midnight. So the market's open, so I'll be able to show some of my live setups, live charts, live everything that I got going on. So um, give me 1 second. Let me grab my thing really quick. I'll be right back. Hold up. All right, I'm back. Um, Sorry. Give me 1 second. I am getting something together. All right, so this is about supply and demand. So first off, we can start on higher time frames. First, you got to understand what supply and demand are. So supply and demand are basically retracements in a trend. So to give an example of that, so in a downtrend where price is down, lower high, lower low, lower high, lower low, lower high, lower low, lower low. Okay, excuse me. So once it established itself, right? So once it went down, once we got the candle that signified a pullback, this entire, I'm gonna turn this blue really quick. This entire pullback area is technically a supply. Then once it makes a new low and price pulls into here, guess what? Once price forms a new low and pulls back, this is another level of supply. Okay, so that's really all supply and demand is. This is supply because it's above. Um, so for demand and an uptrend, boom, 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 boom. An uptrend, once it formed this and started to pull it back, this is the demand. Simple as that. Now we're going to get into refinement and everything as we look at it on the actual charts because we are looking to enter off our supply and demand zones. However, we want our supply and demand zones to be at least a 50% retracement. To explain why that kind of is, it's like getting a sale in a store. That's why you have to view it. Once you understand that the market moves based on other traders acting on their beliefs. Once you're in a trade, you're in a trade. Like it's nothing else you can do to make sure you win that trade and don't lose that trade. Whatever happens in the market is going to be based on other traders acting on their belief of what they believe is high and what they believe is low in the market. So when we're talking about retracements and only wanting to get in at the 50% retracement, pretty much what that means, let's imagine you are somebody who's into reselling, right? So you like to buy things cheap and make a profit off of them. So let's say there's a shirt that you know you can sell for $100 and it normally costs $100. If it's 10% off, you're not that likely to buy it, right? You don't see that much profit in it. 20, 30, 40 you might do. And then once you hear 50% though, it's a shift. Now the thing is, some people might think 20, 30, and 40% is a good deal, but some people might not. And that's up for debate. But once you start getting into 50, 60, 70% off, it becomes more of a agreement that that's a good deal. Like less people are saying, "Oh, 70% off is a bad deal." Of course, there's still the few outliers who will say 70% off of something's a bad deal, but we know more people than not are going to say 70% off of something is a great deal, because that saying that $100 t-shirt you're able to buy for $30 and sell it for 100 and make 70% profit. So that's what we want to do. So, in the way that you can do that, you can use fibs. I know some people use like the Gannon box or something. Me, I just use fibs. So I literally go from the low to the high. My 50% mark is shaded from here and down. So honestly, I'm looking for. So look, you gotta look at this. So if this whole thing is my supply level, so price came here, this was the low, and it broke here. So this is my supply, and this is where I will put my fib. So I want my supply to fall within here. So I will refine it in some way, whether it's a candlestick, whether I just split it in half, but I need to refine it in a way to where it falls within this 50%. Once it falls within this 50%, I'll get rid of this, and I'm just waiting for it to pull back into here. Once it pulls into there, that's when I'm looking for opportunities to get into trade. So supply and demand for me is going to be, and understand I'm only referring to technicals. So for me, I am a believer that trading is 10% technicals, 90% psychology. So when I'm take this with a grain of salt when I say this. The most important thing to know, especially if you're interested in this strategy or you trade supply and demand, is going to be the concept of understanding supply and demand. You know, um, market structure is going to help, but if you can identify supply and demands and reversal patterns off of them, like, you're going to be okay as you learn market structure. But market structure and supply and demand together, for me, it's all you need. It keeps things simple enough, and in my opinion, it's all you need as far as a system to be profitable. And I'll be showing exactly how I combine the two and use them together myself to be profitable. So let's actually go to the live charts. So I showed y'all this, but now I can go a little more in detail here. So we can just scoot back. I'm gonna go to the dailies because I'm gonna try to find some good structure that can be used. The structure is all a little choppy, but we'll come here, right? So after this candle, we can clearly tell prices in an uptrend. We can mark our lows, which is here, and our high, which is here. So this price had a low here, pushed up, provided a chalk pattern here. So we have a chalk pattern here, which we talked about last time. A chalk pattern is where the sentiment of price changes. So price was clearly in a downtrend, creating lower highs, lower high, lower high, lower high, lower high, lower high, until it broke and stopped creating lower highs and created a higher high. So this was the last high before price broke this high, which means this entire area is our demand zone. Now, to make sure it falls within the 50%, we would come to our low and our new high and make sure it falls at least within this yellow area, which is the from 50% down. It falls within it, so we really don't need to do any extra on it. And essentially what we're waiting for is price to come here, produce some type of reversal pattern, signifying that price is reversing back upwards. So that's literally all we do. Now, when we have a high low, we want to see price really test this while it's still within this range of high and low. However, when it doesn't, we'll leave this zone here as an open zone. An open zone is just a zone of supply or demand that was never tested It was created and never fulfilled or tested or whatever terminology you want to use. So in this case, we have untested demand because this is the entire demand right here. Price created a high, pulled back, and then broke that high, never coming back to even mess with it. So we leave this there um, because we just believe at some point in the future, price will or can come back and act on this open zone of demand. Now, once it's tested, we let go of it. Like once a demand is tested, you don't use it more than once. So that's another thing. Supply and demand is very similar to support and resistance. Um, the only a couple big differences are support and resistance is based off of already formed structure. So you're just assuming these certain levels will hold. Supply and demand, you're kind of getting ahead of it. So you're looking at the retracement and where there was a lot of consolidation, basically where a lot of people loaded up orders, and you're assuming that level will hold with no kind of form. So in a way, supply and demand is you utilizing what's available to make an educated guess of where you think price will respect and where it won't, where support and resistance is using what structure that has already been formed to define that. Um, I used to trade support and resistance until I really started looking at supply and demand. It makes more sense to me because you got to think of the big players in the market. If you're doing support and resistance, and your support and resistance is drawn where everyone looking at the market can clearly see those levels of support and resistance, big players are going to want to take the liquidity that's above that high of the resistance and lows of the support and then make their moves because they're easy areas that they know, hey, it's money sitting above there, it's money sitting below here, let's take them both out and then move, right? um with supply and demand, it's a little more discreet, and you got to understand the big players want to be discreet because they don't want everybody to be making money with them. Essentially, there has to be people on the other side of the trade so they can make money. And if it's easy and simple all the time, nobody would be on the other side, so they really wouldn't be able to make any money. Um, but those are really the main big differences. The main other big difference is that with of course support and resistance. Once support and resistance is broken, you can leave it on there because the ideology of, hey, support turns into resistance, resistance turns into support once it's broken. Supply and demand does not work that way. When supply and demand is broke, you delete that zone. That zone is no longer viable. Once supply and demand is tested, you delete that zone. Now, the amount of times you allow your supply and demand to be tested is up to you. For me, once it tested the first time, I'm done. Um, I might do a second. Like if it tested, goes away, and then comes back to it, I'll count the second one. But after two, I'm done because what you gotta understand is the more times it hits, right, the more obvious it is. And now it goes from, well, still a level of demand, but now it becomes a level of support for those. I mean, support for those retail traders who trade that way. And if it's obvious to them, it's obvious to everybody else. And you getting in a trade there might not be the smartest thing. Um, So yeah, you can use that to your discretion. I honestly wouldn't do more than three touches on the supplier demand zone, but then you delete it and continue to go. So showing from here, just because this is a good example, um, price pulled back, so this became a weak low. Remember, it's not a strong low until price breaks structure. So then it came up, broke structure. So now that's a strong low, basically meaning unless price is changing from uptrending to downtrending, it shouldn't be breaking this low. All right, so remember, price was here and then it came and broke it. So because the break of structure occurred here, from here down, this whole retracement, right, is our demand. Now again, we draw our fib on from the high to the low to make sure our thing falls within 50%. So in this case, it does not fall within 50%. because it does not fall within 50%, we have two things that we can do in a case where it doesn't fall within 50%. The first option is find the last bearish, because we're in an uptrend, it's bearish candle. If we were in a downtrend, it would be bullish candle before price pushed up and broke structure. So we go to the last bearish candle. It's this little doji right here, and it falls within the 50%. So what we would do is just pull it here, and this would serve as our level of demand. The second option, let me go back. The second option is to just cut this in half. So when you put your mouse on here, you see these little dots. You got one here in the middle, you got one here in the middle. This is the halfway we're looking at. So we're looking right here, and it looks like it's 87315. So then we could just pull it down. That's literally splitting it in half, 87315, and then let it ride from there. And looking at it is crazy. They literally both fall in the exact same spot. So this is another level of demand. Once price formed this high, we're looking for it to pull back here, which it never did. So guess what? We have another open zone down here. So what next? So price got here, it pulled back. I'll look at that later. Price pulled back, right? Week low, then it finally broke it, making this a strong. Now this is a strong low, right? So we see that this was the high before it pulled back and broke it. So from here down is a level of demand. And pulling up, we see this level of demand falls within our 50%, so we don't touch it. That was an explanation. Once you identify your level of supply or demand, you have three options. Leave it as is, which I recommend if it falls within 50%, because the more you refine your supply or demand, the higher a chance that you could possibly miss the move. So when you do have a supply or demand that does already fall within the 50% premium, leave it alone. Don't look to continue to refine it, because at the end of the day, even once it gets into it, you're still waiting for a reversal pattern anyway. So you want your supply or demand to be a little bigger, because once it hits that supply or demand area, if you get a reversal pattern on top of that, now you're looking for entry, right? So if you have it defined so much to where it's this little skinny zone within all of this area and range, it might be harder for it to get there because you're trying to be so precise instead of just giving price a huge range like this. And when it comes into it, scaling down to a smaller time frame to look for whatever reversal pattern you need to enter, instead of trying to wait for price to get to this very, very precise zone for you to enter and getting stopped out due to liquidity or for many other reasons as well. All right, so we're back here. This is our level of demand. So price formed this high, and this time, to our surprise, not to our surprise, but this time price actually pulled back into our area. So once price pulled back into our area here, what we would do is go to the next time frame down. We go into the next time frame down because we want to find a reversal pattern here in this area where price came and touched. A reversal pattern for us is a chalk pattern. So when we come here, we're looking at structure, and we're seeing that structure on the 15-minute. So pushed, pulled back here, pushed, pulled down, boom, pulled down, boom. I really don't like the structure here. It's a little bit too messy and too wild. So then we go down to the next time frame. And that's one thing you could do. Keep going until it makes sense to you. Don't stop because there's nothing else. Don't let it go until it makes sense to you. Only you would know what really makes sense, what time frame you really rock with. You can't let that be determined by what somebody else is doing. Because at the end of the day, you still gotta show up and do your thing in the market. So I'm going to the lower time frame, right? I feel like I like this structure a little bit better when it comes to looking for my chalk pattern, which look what happens. So we're coming here, we're looking at structure. This was the last low. We see price broke the low. Boom, came to here. And then it pulled back. Once it pulled back, boom, boom, boom. So now let's check it because we want to be precise. So we're looking at 5-minute structure on the 15-minute time frame. So it pulled back. Did it break right there? Sorry, gotta keep pulling back so much. Actually, I know it'll help if I just literally um do this. If I fucking do the replay, that'll keep me here. Okay, so we're looking to see, did it break? Yes, it did. So we're being more precise, right? So it broke here, then it pulled back again to this high, then it pushed down again to this low, pushed up, this time actually breaking the high. So we got a chalk pattern to the upside. We're looking for price to come down into our supply zone here, but we clearly see it did, and it actually came back and broke it. So it formed a new low, right? So that's the low and high. Boom, boom, boom. So we're waiting for price to either break lower, so we adjust our structure, or give us a chalk pattern to the upside. And this is an example of how I enter trades, how I trade. Boom. So it broke here. Let's see if on the 5-minute. It broke on the 5-minute. So because it broke on the 5-minute, we now have a chalk pattern. So this stays our low, but this is now our new high. This was a protected high and it got broken. So now this becomes a protected low and this is our new high. And because this is where the chalk pattern occurred, from here down is our demand area. Remember, we pull up our fib. We want to make sure we're getting at least a 50% discount. We're not. So we got the two options. Either we can literally split it in half, or we can go to the last candle before price. Um, Before price pushed up. So this one right here is the last price before it pushed up, candle before it pushed up. Doesn't fall within 50%. So now we would go to the next candle before it pushed up, which would be this one right here. So we're looking at this and we're like, from here, it's right at 50% cool. Or let's look at what the middle would be. So the middle would be right at 87950, 87957. But I actually like the last candle a lot better. So you could pick between the two. Either you could split it in half or you could do the last candle. I'm picking to do the last candle in this case. Yes, it's right at the 50%, but also remember, I'm not too concerned with that because this is my entry. So this is still going to be a very, very nice trade either way. All right. So we came down here. We got us a chalk pattern. And if price pulls back after this chalk pattern, we're immediately hopping into this trade. Immediately hopping into this trade. No ifs, ands, or buts about it. That's our edge. That's what we do. Now, this is just an example. I only do 1 to 3 trades minimum, but this is an example of supply and demand and how we use it. So we're not in this trade yet, but if it pulls back to here, we are in this trade. So let's see if it pulls back. Boom. Let's see. Do we get a pullback? And looking to see if we get a pullback before it breaks this high. Cool. So it never broke the high, as you can see when we went to the 5 minute. Then it finally came down and pulled back. Once it pulled back, we would have been entered right here. Some people would have waited, came and entered here. Wherever you would have entered. Me, I like to kind of take the hands-off approach. So I would have just been entered here with the buy stop. Um, let's see the results of it. So we would have been entered into the trade. Boom, boom. We're just waiting to see price pushing up, pushing up, pushing up. I mean, the price is in an uptrend, so we're just looking for it to fulfill, honestly. We're just looking for it to fulfill what it was already doing. And look what happens. We get perfectly in the trade. Price pushes up. If you had a partial TP at this high, you would have took majority off, left the rest to run with our stop loss move to break even, and waiting to see what else comes of market movement. Right? So the next thing we would have been able to do is this. This is the next advanced thing. What would have happened? This would have been a break of structure, right? Right here. And this would have became the new high. This would have been a BOS right here. You pull it all the way to where it broke. BOS. What we would have done is pulled our supply and demand from there on down to wherever the low is, which the low in this case is down to here. Look to refine our zone. So, boom. From here to here, which our last candle falls in. So we'll put it right here at the last candle. And boom. Now if price pull back to here. Oh shit, I did not mean. So now if price pulls back to here, we're looking for a second entry. Stop loss here. TP, same spot. Again, I only take 1 to 3s, but this is just an example here. So let's see if we would have got stopped into it. So price pull back, pull back, pull back. Boom. So now we're into a second position, scaled in already. So let's see what occurs. Boom. We're in a second position. Let's go to a higher time frame to speed it up a little bit. Speed up what happens and occurs. Pull this one a little, pull this one a little. Push, push, push. So it still had whatever was left in this trade. Boom. And just like that. Price got close to stopping us out at break even in this trade. It didn't before. Guess what? It turned around, pushed. It would have got up here. You could have took majority. What I like to do once it finally gets to the high is fib extension. So what you could do is take majority profit off here at the high and then leave the rest and adjust the stop loss to the 27 extension. Then if price gets to the 27 extension, let's see if it does. Boom, price gets to the 27 extension. Guess what? You adjust price stop loss to the 61.8. Now the 61.8 concludes our trade. We have no logical or technical reasoning for staying in other than that, other than past the 61.8, other than greed. So if we're in this trade, let's see if it gets to the 61.8. And you could adjust your stop loss with structure along the way. A lot of that is going to be based on you as an individual. For me, this would have been close enough to call this trade. So what turned out to be a 1-to-1 and 1-to-2 ends up being super one here and a 1-to-3 here, by being able to hold through. And this is how we utilize supply and demand. And this is the beauty of supply and demand. Supply and demand works on all time frames. So you see, even though my overall move, right, my overall low, high, pullback is based on 4-hour structure, I'm able to go down to the 15-minute time frame and utilize supply and demand the exact same way. But instead, I'm utilizing it in a way so that I can get in on the opportunity. So I'm using the high time frame to give me an idea of where price should be going. Because based on the high time frame, because price was in an uptrend, if price came here, make the low, made a high, I'm expecting it once it pulls back to my supply area to continue pushing higher, right? I have no reason to think otherwise until price breaks a protected low and begins forming structure in that um in the down direction. But because price is forming and trending in the upward direction, I have no reason to think anything other than that price will continue to form higher highs, higher lows, more higher highs. So on the overall uptrend, I understand that my bias is once it pulls into here, I'm looking to buy up to the high of the 4 hour. But to enter, I'm going to the 15-minute. Once it enters into my demand area, and I'm looking for a reversal pattern. Once I get a reversal pattern, I'll get into a trade here up to the highs first. After it gets to the highs, then to the 27 extension, then to the 61 extension. And that's pretty much simple of how I use supply and demand, what supply and demand is, and how you can use supply and demand in trading to make you money. Like literally, this is my system. Like, and it does not change regardless of the situation. Like, let's go back and see if I can find something else for us, right? So look, we were able to take advantage of this. After this, we let go of the trade, we erase our stuff, blah blah blah. This zone has been tested, so this zone is no longer viable to us. We could pull this. This one was tested, so this one doesn't matter anymore. We could pull this one over because this was the low. This is the new high. So first we have to go here to identify our new structure. So this becomes the low. This becomes the new high. Why are you standing behind me like that? Alright, perfect. And then it's the same thing over here. So after this one's the high, this was the low, this was the high. This is our full demand. Again, we're pulling it back. This is the last candle, but I actually like having it where, so I would have put it right. Well, that actually might not have fell within our 50%. Let's check. Nope, it doesn't. So I actually do have to put it right at the correct one. Once it pulls down, boom, we're on the 4 hours. So you guys already know what I'm doing, going down. Don't like the way the 1 hour looks, go down a little more. Boom, and then we here. So now I'm looking for lows and highs. Low, high, low, high, low, high, low. And it looks like it's pulling back. So as of right now, I know I have my high, and my low. Either it's going to break my low and keep going lower, or it's going to give me the reversal pattern I need to get into a trade. So let's see what it does and what we'll end up doing. So price haven't closed below yet. Let's see. Now it did. So structure changes. Highest pullback was here. So lowest point. Now we're waiting again to see. Boom. So now it broke, gave us the chalk we was looking for. Now we're looking for a pullback. Again, we want to make sure it's within the 50%. And we won't know till this finishes and starts to retrace. So right here. So now we can do from low to high. We see that this falls right at the 50%, so I would not move it personally, even though it's so close. And for me, you guys know, looking to enter right there off of it on this pullback. And ride it up here. Ends up being a 1 to 2.65. Some people might have refined it, to here or even here. If I refined it at all, it would have been to this one. Which, yes, we will actually say I would have done that there. And then entered here. Because that's what I actually would have done. So now we're just going to let it play out and see what happens with it. So, kind of back to what I said before. I trust my zones. So here, price broke the high. So technically the high and low have changed, but we're leaving this there as an open zone to see what happens. And sometimes what I do is I'll go to the higher time frame. So the 15-minute was getting a little bit choppy in this area around the high. So I would go to the 1 hour to see, is it breaking on the 1 hour too, which is not. So that is kind of telling me that it's holding on the higher time frames, even though the lower time frames it looks like it's breaking and not breaking, breaking and not breaking. It's holding on the higher ones, which is what matters. So we're looking to see. In this case, I would have already hit remove this because it broke the high and stuff so many times. But for the sake of the video, an example, we're just gonna let it play out to see exactly how it would have went. Okay, so in this case, it actually never came down to our supply zone, which that happens again. We don't get every trade. So it never came down, so we never got entered into the trade. Simple as that. But this would really ain't about entries though, so that's the thing. Like, I don't want to get too focused on entries and this is looked at as entry video. No, this is just an example of how I use supply and demand because knowing what supply and demand is alone really ain't going to help you much. Um, you got to understand kind of how people use it. Now, you can experiment with it on your own just by knowing what it is, and you might find a system that you like better than this one or better than something else, which is completely okay. Like, everybody's entitled to their things, but just understanding what it is, how it is. Every time price breaks structure, it creates supply and demand. Simple as that. Again, I'll show you. Boom. Look, we're here. High. This is the low. This is where the previous break of structure occurred. This is demand. This was the high. Price pulled here. Price provided a change of character, which pulled all the way down to here. This was the point where this was the low where the change of character took point, pull back, boom, supply. And this supply, it actually came back in, tested this supply, came back in at some point, tested this supply, pushed down to this low. So somewhere in here, we might have been able to get a short position back down to this previous low or whatever the case may have been. But yeah, this is supply. Again, even though it broke structure down here, guess what? We would leave this as an open zone until it came and was tested into. Why do we do this though? Why do we leave these as open zones? Because the longer they sit there, in my opinion, the more potent they are. Now, I don't leave them for weeks on end and stuff like that, but if it's close to where current price is still acting, um, I will leave it because the longer it's sitting there and price is slowly working its way back to it, the more potent it is for me. Um, Look at this right here. So when price formed this supply zone, it was Tuesday, January 17th. When it came back and retested it, it was Tuesday, January 24th. So a whole 7 days before it came back and retested it. And because it sat for 7 days from the time it was created, it was enough force here, enough people seen or had this zone marked down to where it provided a whole lot of selling pressure all the way back down to the same low that created this supply before it pushed back up in the opposite direction, changing character and everything. Um, so there's a lot of power in supply demand, and really, it's so many different ways that you can utilize it, use it, write it up, draw it up. Um, it's all about really just finding what's simple, and this way is simple to me. It keeps everything simple and everything in line. So the next thing and last thing is I'll actually take a look at my pairs that I'm in and kind of explain how they're marked up. So I always start on the 4 hour, or I might look at the daily. I might just skim the daily just to kind of get an idea of what it's doing, but I really only pay attention to 4 hour. So 4 hour to identify 1 hour. So that's what this is. It's my 1 hour high. It's 1 hour low. Price is in a downtrend. I know that because I put the wherever it's trending. So if it was in an uptrend, this one would be a little shorter than this one because this one's shorter. It reminds me it's in a downtrend. I have my supply here. Price just entered into my supply. So because it entered into my supply, now I'm looking for low time frame reversal patterns. So structure, I actually like the 1 hour in this one. So price had structure here, pushed here, pulled back, and then created a structure out here. So I'm either looking for a chalk here with a pullback so I can enter on the way down, or it's going to break higher to where I will then adjust my structure and await entry. So literally, this is how simple it is. I don't have a lot of zones and stuff drawn all over. Literally just this. GJ. GJ is a little more different. So GJ, I actually had, sorry, I had a full supply here. I had entered into a trade all the way down to here. It started pushing up. Exited out of it. And now I'm actually doing something off of a hunch, a little unorthodox, where I refined the zone within it since it already tested this. and it still looks like it wants to go higher, I re-refined it, and I'm looking for it to test the refined supply. And here is where it stumped me out, where price changed character on the lower time frame that I was on. So at this point, I'm looking for, or I would like to see, price continue up like it's trying to do, where it formed somewhat of a flip pattern, push up to the refined high, and then provide a reversal pattern on the way back down, because I do still think overall it is a bearish in this pair. Yes, it is different, but I am comfortable testing this out. I have a nice hunch about it, not emotional, and just from a creative pace. So I'm not really scared of doing it. This one, to kind of explain this one, so as you can see, we have our 1 hour highs here. Let's go to the 4 hour. So we have our high, we have our low. Price pulled back. Well, price really pulled back here and pushed, but when we go to the 1 hour, we see it didn't break here. So then it pulled back a second time, a little bit higher, where we got in, wrote it down to here a little bit, and and now I think it's going a little bit higher before it makes the full push down. We go to the 1 hour, and on the 1 hour, this is where I was able to identify 15-minute high and low, which is actually what I'm looking to trade based on it. So this is, again, an example of where I don't typically do it, but this time I am. This is an example of where structure works on all time frames. So I'm doing the exact same thing. I have my low, I have my high, I have my supply area, my demand area. It's pulled into here. So literally on the next one, which is the 15 for 5-minute structure, I'm looking for a low time frame chalk pattern, which price isn't providing. It's just breaking structure. So this is an example where it broke structure. So now I'm just adjusting structure and moving my alert. So now if it breaks here, it's a 5-minute chalk. So I'm looking for it to chalk or continue pushing down until it breaks out of structure, which at that point, once it breaks out of structure, it's really it's back to previous bias. So these are the two that I'm locked into, that I see opportunities on tonight or soon. These are my backup pairs. These are basically ones that aren't in opportunity zone. They're just kind of flowing, right? So this one I have the high low, my zone, and it's nowhere near my zone. It's just floating, creating internal structure that I do not trade. Same thing here. Yes, I have an open zone down here, but we're not paying that attention. We're paying attention to our range, which is low, high, supply demand zone, where it's nowhere near it. That's pretty much what all of my backup pairs look like. They have a high, a low, demand zone, and it's just floating in between. It hasn't got to my area of opportunity yet. See, same thing, low, high, supply, not there yet. Low, high, supply, not there yet. So that's why they're backups. The minute they get into opportunity area, they go into my lock-in pairs, and now I'm waiting. I understand that I'm waiting for some type of reversal pattern, because once I get it, now I'm looking to enter the trade. So yeah, that's kind of what I'm looking at for tonight and for the week. And that's supply and demand. Like literally, as I said, it's not supposed to be hard. It's supposed to be simple. When you understand that only 10% of your trading, your journey is really the technicals and the rest is mindset, you don't want to find a very super complex technical system, because now you got to focus. If it's super complex, you got to focus a lot of energy on it. And why do you want to focus so much energy on something that's only worth 10% of your overall goal and outcome? Which is, so yeah, this is literally how I keep it simple for myself, and it gives me more time and the ability to really focus on my mindset and making sure I'm in the right state of mind when approaching the market and looking to trade Boom. And I'm just finishing this. We're looking to trade. So the next video I will do is actually going to be on multiple time frame structure. So I know I kind of did a little bit of it tonight on this one, but I feel like it'll make a lot more sense when with that one there. I know I've kind of been all over the place. I honestly, the point of these videos ain't to slowly teach and teach and teach, but it's it's going to be me just on here giving out knowledge on whatever the topic is. As you go through them and get better understanding of the things, you might be able to go back to previous videos and see them in a different light. But I'm not dumbing it down. At some point, you'll understand it. You'll go back to the old videos and you'll get a better understanding when you have an understanding than you are now, very fresh into it. It's just your first time hearing some of the terminology and working with it in a way that I work with it. So, yeah, the next video is going to be multiple time frame structure, and that's pretty much what I was doing, where I was reading kind of like what I'm doing here. You feel me? Know how I'm reading. Let me go to my lock-in. So, like for EU, and I like this one just because the structure is so clean on it. So, how I'm reading this 4-hour structure of, okay, it's downtrending, so I'm expecting it to go down, pull back into this area, and continue pushing down from a high time frame perspective. Because I expect this from a high time frame perspective, I'm looking to confirm this for an opportunity on a low time frame. So on a high time frame, it's downtrending. But on a low time frame right now, it's uptrending. And I'm looking for it to reverse to downtrending on a low time frame so that I can potentially get an opportunity somewhere up here and ride it all the way down to the low if based on this high time frame structure. So that's literally multiple time frame, but this is literally, again, this is just a quick version. Being able to take this high time frame bias and then utilize the low time frame structure so that you can get into it riding it in the direction that you expect from your high time frame bias. It's literally just like that. But I'll get in more detail of that on the next video. Love, peace, man. Good job. We just gotta keep showing up, man. Keep showing up.